what impact does the U.S. engagement in the Israel-Iran war have on U.S. mortgage rates? That's what we're going to talk about today. Stay tuned. Well, the U.S. got themselves in the middle of that Iran-Israel exchange of missiles that's been going on for the last couple of weeks in an effort to slow down Iran's nuclear missile program or the development of nuclear weapons. And the impact that the U.S. involvement is going to have on that war, and more importantly, what impact it's going to have domestically on U.S. mortgage rates or home loan rates is very difficult to predict. Now, one thing that is classic economics is that in the short term, investors typically flee to safety when wars start. That would be U.S. Treasury bonds. And since the 10-year bond is closely tied to U.S. mortgage rates, or has been historically, the thing that may happen is mortgage rates may go down in the short term. But given that the war involves Iran in the Middle East, oil could be the wild card. If Iran cuts oil supply and thus causes the prices of oil to go up, that could have a big impact on the economy, especially prices, and that'll make interest rates stay up, and that could be a long-term implication. One thing that is certain is that uncertainty, caution, and fear are running amok again in the United States economy and in the United States public opinion. Those things don't tend to help buyer and seller confidence in the overall economy and clarity in decision making when it comes to real estate. So the U.S. impact and involvement in the war may help mortgage rates in the short term, but be careful, because if you wait too long, we may see them spike because of the impact of oil and other externalities or secondhand effects of the war itself. Hope this has been helpful. If you have any questions about what you should do, reach out. We can help.